and good evening from wherever you are dialing in from. By way of introduction, my name is Deborah Keller, and I lead on the Impact for Breakfast initiative, supported by Artha Impact, which is the impact investing arm of the Rianta Capital Family Office, based here in Zurich and in London. Our specialized group has been gathering and growing since 2008, starting in London with a small group of investors, with an expansion today to 30 cities/chapters that are people that are meeting virtually and also in person for a breakfast to discuss challenges, models, methodologies, case studies, and ideas that help us each to better navigate and understand the space between social and financial return. Our objective with our informal gatherings is to help build relationships and learnings that drive action and ultimately more capital into the sector. Our events and sessions are led by sector experts, and they're a safe space for brainstorming and deconstructing the most challenging questions we face in the impact investing space. Impact for Breakfast is an informal group of family offices, foundations, funds, venture philanthropy, and intermediary organizations with a common focus on social enterprise, entrepreneurship, and impact investing. For those who are here for the very first time and wish to learn more about our group, you're welcome to visit us on impactforbreakfast.com. I will share the link with you in the chat field shortly. For more than a decade, Persistent Energy has been a leading investor and venture builder in Sub-Saharan Africa. They work hand in hand with exceptional entrepreneurs, investing both financial and human capital to build successful climate ventures on the continent. Persistent provides robust finance, strategic, governance, technical, and legal venture building to early-stage companies it invests in. These are embedded venture building services in which members of Persistent's team take on strategic roles within the company that in emerging markets cannot be easily filled with the local talent at such early stages. I have the pleasure to introduce you to our wonderful speaker group that we have today that are going to be answering questions of the interview that Marcus Witter is going to be leading. He is the managing partner at Investment Associates, apologies. And as speakers, I have with me Tukam Nufanke, who is a principal and venture builder at Persistent. He helps drive investing and venture building efforts across Sub-Saharan Africa. And last but not least, I have Jessica Stevens, Director of Business Development at Persistent. She's an entrepreneur, renewable energy and off-grid policy expert with more than 15 years of experience working across Africa, establishing and running businesses. Before we get started, I want to inform you that this session is going to be recorded. We will be sharing the recording with you, that you're welcome to share with your colleagues and network that might be interested in the content that has been shared today. During the presentation, if you have any questions, you can post them in the chat field, and then we'll make sure to cover them in the Q&A round that we have planned after the interview. Please make sure to mute yourself if you're not speaking, so we don't have any interruption during the talk. And that's it from me. So with no further ado, over to you, dear Marcus.
So thank you, Deborah, and also welcome on behalf of Investment Associates and from my side to today's session. As shared, my name is Marcus Witter, managing partner at Investment Associates, and we are pleased actually to work with Persistent, and I'm very happy to moderate today's session. Just kind of to recap on the company background, Persistent has been an active climate investor and venture builder in Sub-Saharan Africa for now more than 10 years. The team comprises 26 professionals, maintains offices in Nairobi, Lagos, Zurich, and New York, and advises on assets of $175 million invested in 23 companies. As Deborah shared, kind of the investment focus lies on distributed renewable energy, electric mobility, and related technology enablers. The team takes interim management roles in finance, legal, or technology to, how should I say that, to bridge critical gaps and set them up for scale. And Persistent is also backed by a diverse set of founders, including high net worth individual, family offices, corporates, foundations, and obviously DFIs. So I think it's a very good fit today. And currently, for what it's worth kind of sharing, currently we are raising a 100 million climate venture builder fund, investing in the mentioned early stage companies across Sub-Saharan Africa that will have positive climate impact and create employment opportunities. I'm also pleased to have Jessica Stevens and Tukam Gufanke being with me. And I think I just let the speakers introduce themselves. So handing over to you, Jessica.
Thanks, Marcus. Thanks, Deborah. It's really lovely to be here today and lovely to see so many people on the call, some of whom I know. It's nice to have some friendly faces and some new faces for me. As Marcus and Deborah said, my name is Jessica Stevens. I'm the Director of Business Development at Persistent Energy. I have been working in Africa on energy access and decentralized infrastructure for the better part of the last 10 years, and with a particular focus on mini grids until I joined Persistent recently. And prior to that, have set up and run a few separate companies on within the food and agricultural space. So happy to be here with everyone. I think maybe just before I hand it over to Tukam, I joined Persistent relatively recently, coming from the mini grid space, and a huge piece of the reason that Persistent was attractive to me as an investor is because of the venture building structure and the embedded work that they do. After 15 years of working with startups, it's one of the only investors that really provides such tactical support at such an early stage. And every company that I've worked with or for in the last 15 years would have been grateful to be able to have that kind of structured support, particularly in CFO and legal in the early stages. I'll hand that over to Tukam.
Hi, everyone. So I'm Tukam Gufanke. Actually, the full name is Godfrey Tukam Gufanke, and I give that full name because it's a mix of Cameroonian, where I'm from, but it's also German. Godfrey is German, but my accent is from America, and it has its British days. And I'm based out of Nairobi. So I'm a senior principal with Persistent, and I think it's been said before, I drive a bit of investing, oversee portfolio management, a lot about e-mobility work and venture building, right? And then some of our core sort of fund management mandates. I've been with Persistent about 3 years. Prior to that, I was at MasterCard, the corporate. And, just as I was leaving, I was running our sort of impact sort of business. And I think that's what led me to Persistent, in terms of, the great team of people we work with. And also because I think the work that Persistent does, which, I think we'll talk about a bit later, is quite challenging and also very personal too.
Excellent. Thank you, Jessica. Thank you, Tukam. I think we're gonna have kind of now 15, 20 minutes interview round, and then we open for questions. And let me kick off with just kind of learning a little bit what you guys do on the ground, kind of, boots on the ground topic. What are you currently working on? I don't know who wants to start. If you, maybe Jessica, you wanna kick off on that.
Yeah, I can go first and give a high level view, and then I think Tukam can talk more specifically about the companies that we work with and venture building in a much more hands-on way. So Persistent Energy is an investor, but the way that we've specialized and developed our portfolio is through this very, very hands-on approach at early stage. And so we are one of the few early stage impact investors in Africa that has teams not just in one African country, but we actually have staff in Ghana, Nigeria, Kenya, DRC, and Uganda. And the teams in those countries do a multitude of things, but one is they help us deal source and find local entrepreneurs who have local expertise and the technical expertise to build their companies, but may not be in a position to raise the right kind of financial capital to build those companies. And so they're, a sweet spot for us, and having that local deal team is really critical for us to be able to find those local entrepreneurs, such as the Altec team in DRC. And then we really focus on sorry, excuse me. And then we really focus on this venture building part of our business. So finding those local entrepreneurs who have that local expertise and skills gap for them. And so at a holistic level right now, Persistent is working on building out the investment portfolio in climate businesses. So right now we invest in quite a lot in the decentralized energy space, and we are looking at making our first investments into ag tech and circular economy in the next few months, and really expanding and building on our expertise within distributed renewables into larger climate impacts across the continent. And I think Toucum is a much better place to talk specifically about the venture building and working with companies on the ground. He's been leading our work with electric vehicles and electric transportation, and can talk a little bit more about the venture building part of that business and developing that business line within the company.
Yeah. Well, thanks, Jessica. I will tell you a bit about what I do in venture building with EcoBoda. And so I would preface it by saying, it's probably going to sound very easy, but it's not, but it's fun. And I'd say for EcoBoda, so EcoBoda is a company in our portfolio, invested in them in, I would say, late 2019, early 2020. And say that because, investment process, right? You start, but when you close, all of those things. But so EcoBoda, they are a two-wheeler company, right? So electric vehicles, essentially decarbonizing electric two-wheeler transport in Kenya. When invested in them, it was quite a small investment to start with, but part of that process was sort of understanding what their needs were from a support perspective, right? So when we say venture building, that just means providing support entrepreneurs need to survive at the early stage in which their companies are. And for them particularly meant three things. One was strategy, the second was strategic finance support, and then the last one, which is I think sometimes overlooked, is just sounding board, right? So the strategy side, what that really looked like was helping them think through, right? Given a bit of our expertise, I said prior to joining Persistent, I ran a business within MasterCard that served very low income populations. So we had to spend a lot of time thinking about how do you reach these folks, how do you segment, how do you get a sense of which ones to prioritize and not. So I brought that experience to work with EcoBoda to help them with segmentation, market sizing, and prioritization. On a strategic finance bit, probably a lot of what we've done with a lot of companies, right? That was really a lot of modeling, right? The stage where all of these entrepreneurs come to you, they're not spending a ton of time, rightfully so, on trying to build, nice models, right? They have sensed opportunity and they're going after it. And so what we would typically do there, and the case of EcoBoda that we did was to help them, build a model that could be used with other investors, But I think importantly, and this is the second piece here on the strategic finance bucket, was what we call unit economics, right? That trying to make sure on paper, right, because there's always a difference between what you do on paper and reality, that the unit economics made sense, right? And unit economics for us just means that, look, does this business have potential to operate in a sustainable way, one, but two, in a way that is going to be profitable for all stakeholders involved, right? So we, that's something we supported in a lot. And what that did for them was a lot of just pricing things that it solved, right? Because a lot of times entrepreneurs, right, you're in a hurry, you sense opportunity, you go after it. A lot of what we do with this is just to help sense check, help give you the tools and help you think through, does it make sense to go this way? Does it make sense to price like this? Does it make sense to source from here? And then the last bit that tags onto that is fundraising, and it's time consuming. Takes up a lot of a CEO's time. A lot of what we do there is we help sort of manage that. In addition to bringing, of course, our own capital to the table, what we also do is to help them raise new funding. So in the EcoBoda case, for example, was helping them raise their first grant, right? Because a lot of these companies were investing in them quite early and still need quite a bit of de-risking. So we help them fundraise not only that grants, but equity and debt down the road. Then I think the last bit, sounding board, I really call that like friendship, right? That I think investing, as most of you would know, it's a people business, right? And it's lonely. For a lot of CEOs, it's very lonely, right? And so a lot of what we do as well as the sounding board is to be friends, is to be, provide a listening ear, right? And so that helps them, again, offload certain things, I would say, but on our part as well, it helps us have hard conversations, right? Like when the company needs to pivot, when something is being done that doesn't make sense, right? But when you have those conversations, because there is already a relationship, those are easier conversations to have, right? So again, this is quite quick. I'm sure you probably have quite a few questions down the road, but this is a high level of some of the things that we do when we say venture building, and this is a particular example of Ecoboda.
Luca, may I ask you just kind of to double down a little bit? I mean, you touched on several points now. If you would highlight or kind of to sum up again, you know, kind of the key challenges when you look at the company, you know, when you're on a daily basis, what are kind of the 3 themes that you say most common or the biggest mistakes company do?
Yeah. Thank you for that question, right? I think I would, you know, 3, I mean, I'll put them this way, right? The first I would say, and this is a bit of our own mistakes, at least, you know, I think it's often, you know, we can certainly talk about, right, mistakes companies make, but I would say that it's interesting, I think, for us sort of like self-reflect. And I think one of the big things that we learned was that, you know, to put it this way, that, you know, we thought Silicon Valley, at least we realized that Silicon Valley is not Silicon Savannah, right? For those of you who are curious, Silicon Savannah is sort of what you call Kenya because of the ecosystem here, right? From Cameroon, where I'm from, we say Silicon Mountain. But, you know, that they're not the same things. And what that looked like in terms of our mistake was that when we started, you know, there was this push about just like grow and scale, become massive, then everything will work out. Well, it didn't work out that way always, right? And I think that this goes back to a bit, Marcus, to the point I made earlier around unit economics, right? That we now try to make sure that from the get-go, there's strong potential and work is done to try to make sure that profitability is prioritized as much as growth is, right? That it's not an assumption, right? I think that's one of the big things we've learned, right? The other thing here, interestingly, is that from our perspective, I'll put it this way, that I think that we realize that venture building is not the same thing as, you know, venture building is not the same thing as venture studioing, right? And let me explain what I mean. I think that at some point, you know, I think because we've kept our eyes close to the ground, right? We listen carefully, we've tried to sort of sense where things have always gone in the market. But I think at some point we're quite eager to do so much that we sort of thought, you know, we could also co-found companies. And that didn't work out well because what we learned was, look, you know, venture build is supporting. Venture studio is a lot more demanding in the sense of and challenging, right? Because you can come up with an idea, but you know, if there's no ownership, it's often hard for that thing to thrive, right? And that's what we learned. That, you know, in one case where we saw opportunity, found some people, co-founded the thing, it was exciting, but then it was tough because, right, we couldn't give it the kind of dedication and full commitment that a founder would typically do. Right. And that's one of the things that we sort of learned, like, look, if we're going to co-found, we need to be very careful, but that, you know, it is not our default position. And I think the last bit here is that, you know, I think, and this ties in a bit, I think, to what you know, said a bit earlier about fundraising for us is we realized that we missed out a lot on not being able to follow on. That there were quite a few interesting companies in our portfolios and follow on in 2 ways. One, in terms of returns that we could have captured because we helped, you know, create those returns, but also because there are quite a few companies that with some follow on could have survived the value of death, but it couldn't, right? Because we just did not have the funding to follow on, right? And others would not do it because, you know, one of the things that at Persistent we're focused on is investing in this space where, you know, typically below $1 million, right, in ticket, where there's just very few. As an example, I think it was like what last week or so, I was at the meeting conference, you know, it was a graduation ceremony essentially for some startups, right, and they were all fundraising. And then we, you know, asked them, well, how much are you raising, right? And you do the math. Most of them were raising where they will need 2 or 3 investors to come in with less than $1 million in revenue, sorry, in investment. Right. And most people don't do that, right? Most people in the market today, because it's difficult to invest in that space, would typically tell you, well, when you need $1 million, right, come to me.
Why do you come to us? Yeah.
Yeah, right. So it's something that.
Where are you, friends? Where are you? Yeah. May I ask you to come, just kind of staying a little bit, so kind of a key takeaway for me is kind of, you know, roles and responsibilities, you know, kind of owner and investor, how you align this. Second is fundraising. Now, when you look at companies, I think just there's a big, or we hear most people on the call, you know, they also look at companies themselves. So there's a lot of flow. What kind of selection process do you have, or which companies do you look for? What does a company need to bring forward that Persistent think it's worth engaging?
Yeah. No, I think that's a really great question, and thanks for asking that. So I'd say for us, really, it comes down to a few things. I think one is just, right, I think the stage where we invest, as I said earlier, I think investing is the people business, right? Where we invest, right? The stage where we invest, right? And so the team is a big part of why we make an investment, right? That, is the team sort of, do they have the kind of relevant experience in the market, right? Do they have somewhat of a track record, right? Because it's not, you don't always have to have a track record, but it's helpful. But I would say the big thing for us is just, do they have a kind of experience in the market that is, gives them local knowledge? Because we found that a lot of times the companies that have done well are ones where there's quite a lot of good local knowledge. Same on the team topic, we try to look at, is the team sort of diverse, right? In terms of, not only experience and gender or race, but all those things I think we've seen are important in bringing different kinds of perspective in challenging markets, right? Because, whether we like it or not, climate space, exciting as it is a challenging market, it's a challenging sector, and we're often investing in challenging markets. So all of those perspectives are important from a team perspective to make it. The second we look at is more just, right, unit economics, right? Is the team exciting? Yay. Is the unit economic there, right? As I said, it's something that we look at quite closely, right? Does this have potential to do well on a unit basis? And unit basis definition is going to vary with companies, right? Can it do well, right? And then after that, is the market interesting, right? From a size perspective, right? Is it interesting? And the other thing here is, like, we're not always looking for, as I said, we realize Silicon Valley is not Silicon Savannah. We're not always looking for unicorns. We would love them. Don't get me wrong, right? But we also realize, like, look, we're operating in markets where
pragmatic approach.
Yeah, we have to be pragmatic, right? That if part of what we're doing is build its impact, right? Is success can also look like a business with good cash flows to pay us back in dividends. Right?
I think, by the way, Tukam, I think that's kind of let's pause here. I think that was a very detailed answer. Thanks a lot for that. I think that all makes sense. Let's talk a little bit, as you know, impact for breakfast. Now you have the companies, you have the financial modeling, the roles, financing. Talking about the impact, and maybe handing over to you, Jessica, kind of, just to sum up again, the last 10 years, what did you, did you deliver impact at the end? And if so, what was it?
Yeah, I think Persistent is in that sort of sweet spot in impact investing, right? It's a new hot language, and everyone is talking about impact. And I think we've been at the forefront of impact before it was a in creative language that everyone was using. And I think there's a few different ways that Persistent has been really impactful in the market. The first is that we actually really prioritize building up local companies and female-founded companies. So 37% of our portfolio has female leadership and senior management. We've created more than 7,000 jobs for women with the companies that we've invested in. And we've created more than 21,000 jobs overall in the companies that we've invested in. The bulk of that impact has been in the last 5 years. But more than that, we've really looked at growing local entrepreneurs who are really embedded in the communities and in the countries that they're living in. The vast majority of our portfolio is locally owned businesses or locally grown. And I think there's the impact of that sort of.
This is kind of key. So the distinction between kind of local, kind of really local and semi-local companies is key as to your activity.
Yeah, it wasn't always. I think in the early days we did investment in a lot of foreign or a lot of entrepreneurs who were not necessarily from from the places that we were investing in, who were sort of learning the market as they were building the businesses. And I think for financial reasons and for market information and the ability to navigate these complex markets, we've seen it makes a lot more sense to invest in local entrepreneurs like the Altec team, like the EcoBoda team, like the Beacon team, who are really we're really developing their internal capacity and then the capacity of their entire teams who are building out those jobs. And then I can talk a little bit about the environmental impact. To date, we've diverted or saved 1.4 million tons of CO2. We've powered more than 750,000 households. We expect those numbers to grow. We're still working on some of the unit economics and the metric tools for ag tech and circular economy, which are much more complex than looking at electric vehicle offset. But as the initial companies that we've invested in, like EcoBoda, are growing, we expect the offset from those to be exponential in growth.
Excellent. I think that's makes perfectly sense, at least for me. Kind of ending up our kind of last question from my side. I mean, we have we live in cycles, and here, I mean, I'm based in Switzerland. We do also non-impact things, and people are a little bit scared of changing interest rates, trends, not catching up the right trends. So maybe if we could, maybe that's kind of a question to you to come, kind of, going forward, the next couple of years, what are themes that you see evolving on the space where you say, the next hot theme that you would like to capture, or on the other side, the next big risk you try to avoid? Jessica, you can also start if you feel comfortable.
Yeah, I can. I don't know where to come. I can answer this to some degree. I think, we were early investors in distributed renewables and renewables more broadly in Africa. We were early investing into electric mobility, and we're actively pursuing deals in ag tech and in circular economy, looking at recycling, value chain, merchandising life, and then looking more broadly at renewable ag tech solutions or ag tech solutions that address cold chain supply issues. Also I think generally related to circular economy issues. And we're hoping to make the first 2 investments in those spaces in the next 6 months. But I think the other thing to keep in mind is, yes, we all of this stuff is cyclical, and at the moment, impact investing is hot and climate is hot. And there is this drift from maybe, distributed renewables or renewables that was really hot and interesting 10 years ago, but those businesses and that market opportunity is still there. And so it's not just jumping from, what was interesting to something totally new. It's building on the existing expertise that we have. Commercial and industrial solar, even though at this stage isn't considered to be extremely hot, is still incredibly important as part of the ecosystem. And as utilities continue to struggle with solvency, those C&I businesses and growing that commercial and industrial load is going to be critical in the overall arching economy in Africa and supporting things like ag tech and circular economy. And so we aren't jumping boat from one hot thing to the next. We're expanding with our expertise into new areas.
I think that's kind of that's a very nice sum up of your activity. I would also like to now, first of all, thanks a lot, Jessica and Touqam, for kind of shedding some light on what you do and what you aim to do and how you do it. I would like to open up for questions from the people on the call. I think we have about half an hour or 20 minutes left, so please feel free to directly address your questions.
Yeah, just unmute yourself and share your questions with us. And if you can't, you can also post it in the chat field, and we'll pick it up for you and share it with the crowd. I have a quick one, just to understand better. When you're working with these entrepreneurs, when do you know when it's a good moment to get out when you have people in the management? When is the moment where you let them fly and on their own, and you say, okay, will be there as a partner on the side, as an investor, but will no longer be in part of the operations.
Tukam, do you want to take this one?
Yeah. No, I can take that. Thanks so much, Deborah. I would say, like, it's in a way it's easy and it's also hard. Let me sort of give the easy one is that I think just from a resource perspective, right? We typically don't aim to be, doing sort of venture building beyond a year, right? So that this goes back a bit to what I think Marcus mentioned, but Jessica as well sort of highlighted that we look for very good entrepreneurs, right? Very good doesn't mean perfect, right? What that just means is that look, I sort of think that they're typically very good at, and then we sort of realize like, look, at the stage where they are, right? Finance, for example, is often a gap. And what we do there is that when we provide that support, part of it is also, to use, what you call it, use investment language, right? It's self-liquidating in the sense that the hope is often that by the time you're done with whatever you're doing, you found your replacement, you've helped them find somebody to take on that role, at which point, they can do it better because maybe they've raised more money, right? Because they've attracted the right kind of talent. I think what we do in a way is like beyond the technical bit is also buying time for them, right? So I'd say that in terms of time that we set, probably no more than a year, but there's certainly, of course, and this is the beauty of sort of being adaptive is, sometimes we have to go back, right? But it's different things, right? But that when we start out, there's often a very clear, this is how long we're going to be here. This is what we're going to support you with, right? Including finding somebody to take over the key aspects of what we're doing that needs to continue to be done.
Thank you.
May I
Just a
ask
quick-
you, or please?
Yeah, no, just a quick follow-up. So, so when we, with investments that we do, we see sometimes, we see most of the difficulties when these companies are growing is the roles that the founders will be taking. So, so do you have are the conversations difficult and you help them what roles is a perfect fit for them? Because they don't always have to take the managing role or a managing role, but not like in the operations. Is that, are these difficult conversations you're having with the entrepreneurs? Because that's what we see sometimes when we need to define their roles as founders in the organization.
Yes, I think very much so, Deborah, because, and that's where I talked earlier at some point about, right, that friendship, right? It's because those conversations are inevitable, right? But, you manage them, you do them well, I would say, because, right, you have walked the journey with these folks and they know you care, right? That you're not try to get rid of them, because I think one of the interesting things when you're investing out early we do is that there's often that sort of worry on the parts of founders that whatever you're saying, you're trying to divest them of their hard-earned sort of work, right? And that's not the case. As I said, I think I agree with you. Look, I think that's where friendship and going into the trenches, as I'll say, comes in, right? That what we do, it's not an approach where we sit in an office and do some backstop research and hear some interesting things. We work day to day with these folks, right? We embed ourselves, I think, as Jess has said before, and that means that it allows you to see some of those gaps. But if you've done well, you also build the kind of relationships that make those conversations easier, but not easy, right? They're never easy conversations, but they're made easier.
Can I just add one tiny little thing to that? I think the other thing is because the team is embedded, on a day-to-day basis, the understanding of where those gaps are is more clear, and the conversations as part of the senior management team are about addressing those gaps. And so part of that transition as the venture builders move from, or as our team moves from venture building to, advisory roles on boards and strategic advising, but isn't embedded in the company, after 6 to 12 to 18 months, those conversations are more ingrained, and there's part of that process is helping do role definition, right? So often with early stage startups, the founder is doing the CFO role and head of legal and marketing, and just by the nature of having these venture builders embedded in the company, there's an ongoing dialogue those gaps are and helping to funnel the CEO and that leadership team into the right roles as part of that senior leadership team before they.
Thank you, Jessica.
Good morning. I have one question, wondering about your experience when you looking at your deal pipeline. Does it happen that there is some sort of trade-off between one potential deal that looks very interesting from an impact perspective and another one that is a little bit more attractive from a financial perspective? And how do you internally compare and prioritize? What sort of information or indicators help you to solve that sort of trade-off if it arises?
Yeah, I can take that, Christoph. Thanks for your question. I would say yes and no, right? And sorry again, it's gonna sound like, but let me explain what I mean by yes and no. I think no, you don't always have to make those trade-offs, because to me at least, the sector we invest in many ways is already an impact, right? Whatever business you're probably going to invest in is already an impact. A high impact business, right? That the climate is, I mean, it's sexy, but it's not easy, right? It's a place where I think that whatever the choice that you're making, in many ways, you are making both a bet on, financial return and impact return, right? So I think that's the yes part of the question. The no part, the no part. The yes part is like, you have to make trade-off. I mean, to the extent like, look, you don't have unlimited cash, right? That you have to pick and tell you there are companies that we've looked at where we say, look, the financial returns are interesting, but it has nothing to do with the kind of impact, whether it's environmental or it's social, that we are looking for, and we've had to pass, right? But I would say that a big part of that starts with, you don't have unlimited resources, right? You only have a finite amount of resources, and therefore you make those choices. But I would say that, again, and this is now the sort of, no, you don't have to make trade-offs part, look, climate where we're investing, where you look at solar-owned systems, or solar C&I, or you look at e-mobility, or you look at, circular economy, all of these are impact-driven spaces, right? And so, in a way, it makes it easy to make those choices, because we know that we're moving the needle either way. But as I said, I agree with you, at least some of your point around, look, do we have to make a choice? Yes, because we don't have unlimited cash. But when that comes down to it, I would say that we try to prioritize, look at a balance between what kind of financial return we'll potentially add, but also making sure that it's something that fits in the kind of vision and mandate we've received to do.
I have a follow-up question on this kind of, how do you, when you do an exit, I mean, I understand what you can do until then, and how do you maintain the level of impact, or who at the end are you selling these companies to?
Yeah, so that's a very interesting question, right? And this goes back a bit to, we're in Silicon Savannah, not Silicon Valley. So the ways that we've experienced exits have been, there's certainly your normal acquisition, I would say strategic, right? Where you a company that says, look, they're interested in one of our portfolio companies because it allows them to achieve a strategic goal. That could be, quick entry into market. That could be expanding into something that you wanted to expand into, but they don't want to do it, organically, right? So we've had that, for example, happen. So interestingly is also, and this is the advantage, I think, of investing very early stage, the way we do, is that you often have that at some point, this is sort of a funny way to put it, but you become a nuisance to the company, right? That when they're getting big, at some point, some of the new investors coming in are like, look, I want a concept table. I don't want that many people on the cap table. It's too difficult for us to manage, right? And that's it's happened in our case, that quite a few times actually we have been bought out that way. Our position has been exited that way. We've not had IPOs, and this is, again, Silicon Savannah, right? I don't think our markets are necessarily structured for IPOs, but I would say that the two main ways have been, what I'll call capital consolidation, strategic acquisitions, and then the other one is
Do you check that the exit or the company taking over the company maintains a certain level of impact, or is this a consideration you also kind of apply who's the right?
I think it's tougher, right? Because I think we do a lot of that. As I said, the kind of space we invest in already is kind of caters to that, right? It speaks to all those things. On the exit side is harder, and just for a simple reason. It's not because something that we don't think about. It's just because we're never majority shareholders of a company, right? That, we're always a minority shareholder and quite a small one by the time you're exiting. And what that means is that there's not a whole lot of sway, not necessarily sway, but I'd say real power you have in deciding who gets to buy, right, or not. But you do have, I think, influence on the founders because you've been in the journey with them. That could affect the way that they look at things. But we're often, just because of the minority nature of our position. But as I said, we kind of solve for that in a way because, right, the spaces we invest in, the kind of companies we invest in, these are things that are important to them, and we help them sort of, make that an important part of how they do business.
Understood.
Deborah, you're muted.
Here we go. Been on Zoom for so many years, but it always happens over and over again. So do we have more questions from the audience? Please feel free to share your thoughts or comments, anything. If you have been working the space, your experience, does it meet the same experience that the team is making? So feel free to post, share comments and questions.
I think it would be interesting to understand who's on the call is active in the space. And so it's, even don't shy away if you don't have a question, but it's just if you want to comment or kind of share some of your experience, this is also very welcome.
I'll share a little bit. I hope you can hear me. My Wi-Fi is not ideal right now, but hopefully I won't get cut off. So I mostly work in the US, in California, even though I'm currently in France, and I'm trying to do more work globally because I think I really want to create more bridges between great innovative ideas and capital, which in the US we have a lot of capital available in different ways. I really like that you asked the question about exit, because in the US, I think one of the big challenges is most investors, even though they label themselves impact investors, are still thinking in the old ways, right? So exit strategy, return, and have a really hard time shifting to a different mindset. I think also, what I try to remind people is we can play the traditional VC game with impact startups, because where we can't afford to let 9 out of 10 fail, especially when some of the solutions they provide, the future of our world depend on them, right? So I'm a big advocate for, I'm a consultant myself, I'm a big advocate for saying, how do we build in this? I believe also more in one-on-one consulting and approach than just, traditional accelerator cohorts and so on. And I think, maybe Jessica alluded to it earlier, each startup is going to be different in what they need, what, resources are best for them, what their team looks like, right? So I work with a lot of technical engineer type of founders. They don't have a business mindset. I think for them, 90% of the time, it's not worth trying to become a business person. It's better to get the right person on board on their team. So and I'm still really honestly shocked every day that even in a country like the US, right, the game still hasn't changed. It's like, VC, like the same way. And I'm glad we're adding more diversity, because I think that diverse thinking is needed to start doing things differently. But it's, that's why I really like to connect with people like on this call that are a little bit all around the world, because I think they are in different parts of the world, there are strengths and weaknesses, and how do we kind of blend that more so we can really look at it with a global outlook and bring these innovations, these solutions to, the SDGs or whatever in a more holistic approach versus just, like isolation. So I'm also acting locally, but I think there's also global things that can play a role in that. And again, I'm learning a lot, and I think a lot of things too Cam said about exit strategy, for example, to me relates, because I'm like, and again, the goal should not be, I mean, that's what we know. The last thing we want is this wonderful impact startup being acquired by a big company where the impact is going to disappear as a priority in a day after acquisition, right? So I think for all of us, it's important to keep educating the people we encounter every day about this, and not be shy about saying, look, it's time to think differently. It's time for transformation, deep transformation in this world of investment. And I think also, I'm looking at Jessica again, because you talked about women founders. I think, and I'm going to be a little bit maybe provocative in saying this, but I think in the US, the other big challenge is that diversity is becoming the new thing. And I don't have a good answer for that, but I am also asking, right, if I'm a woman or a person of color and I'm building a company where maybe my main goal is exit and return, and you invest in me, is that really impact? I'm not sure. I'm not sure my European
Handing over to
counterpart.
Jessica. Jessica, this is your call.
Yes. I mean, so that's the problem, is because a lot of US investors are starting to find that excuse in saying they're doing impact.
Understood, Isabel. I think that's
right?
a very specific point. I think it makes perfectly sense. I think what's your take, Jessica, or even Deborah, on kind of is female good enough to qualify for impact?
Yeah, I mean, I think that the African market's a little different in general, and I think the companies that we look at are really different, right? So as Tukum said, by the nature of what we're investing in, distributed renewable energy, energy transition technologies, circular economy, ag tech, and ag tech solutions for increased productivity, like we're already in an impact space. Even in an acquisition, it would require a new investor to structurally want to change the objectives of the business in order to undo that impact. And I think on the gender lens, and I think maybe to the question that Christoph was asking, it's the combination of all of those things. So I don't think we should invest in any single entrepreneur just because they tick some sort of box. But I think in the context of where we're investing, there's a huge, the average age in Africa is 19. The number of entrepreneurs and smart, innovative people that are going to be coming to the forefront in the next 10 years is huge, and so it's finding those people with passion and drive and helping them accelerate in this market, and so it's not quite the same as maybe a European or American market where people are trying to sort of greenwash impact in order to tick investor boxes. Like it's built into the lifeblood of Persistent and how we view our investments, and so it's a little different.
I think, Jessica, I don't want to, or please, Deborah.
Yeah, just want to add one point to Isabel's point, which I think is very important, with the mindset, with the information building with investors, and when we work together with them as well. We made exactly this. We make this exactly the same experience that, they come in and say they're impact investors, and suddenly when it comes to putting down patient capital, or exits, they will push for the maximum, and we can agree on the terms, but then realize we don't have exactly the same mindset when we come in. And on your point, whether investing in female entrepreneur is already enough to call it impact, I totally agree with you. It's not, but I know that everything needs a starting point, and I think the pressure from outside. And it might be this, investing into a women-led business of color. It's a good starting point, but we're not there yet, and they will understand that they're not there yet, and that it's not enough to create the impact that is needed. that we can move the needle. But I think it's a starting point. The same with, you know, the greenwashing, you know, that is happening, that we all see. It is sometimes shocking to see what people call impact, but it is a starting point, and they're starting to learn the language. So I guess it's moving to the right direction, but it's not the same. You can't compare those the impact that you are creating then, and that impact businesses or impact investors that are knee deep into impact are creating.
I think that's a very, very nice summary from you, Jessica, and from you, Deborah. I think it's kind of, obviously there are a lot of open questions, but I think that was very interesting. I would like to start wrapping up. I think in the interest of time, let's start wrapping up.
Or Marcus, can we just take one question? I think
please.
Yeah.
I would also like to give Toucom and Jessica kind of a final vote, maybe just that we don't end on the spot. I think they deserve kind of a final statement. So let's take one more question.
I think Radek, you had the question.
Sorry.
Yeah. Hi everyone. I'll keep it brief. I work for the World Food Programme, one of the UN agencies, and in the Innovation Accelerator. So we work in a similar field. I think, like, following on the previous question, taking the other side, right? I think one side is like pulling towards the profits and that side of things. On the other hand, I mean, I come from more the impact investing space and see that even the humanitarian and development agencies are often approaching it from the other side, sort of more focusing on the profit and not so much on the financial sustainability and so on. Maybe asking to Jessica and to come again, I think, like, what has been your interaction with you know, the humanitarian development agencies, UN agencies, and so on, and do you see them as enablers or sometimes even some of the blockers of you know, developing ventures that can, you know, become...
That's a critical question. So
super provocative. I'm going to toss it to Toucom.
Yeah, no, thanks
I
for
know
that. You know, interestingly, so my previous life, I worked at MasterCard, and I think we did do some work with World Food Programme. But to go back to the heart of your question, really, I think that they're not a problem. I think it's more that my view, honestly, is that I think there needs to be more cooperation. I think we bring complementary things to the table, right? That the kinds of places you go, the kinds of things you see, the kind of perspectives you bring, sometimes we don't bring that as well. And to me, I see it more as an opportunity to cooperate rather than to say, look, you know what, gosh, WFP and all these things are not great. No, I think that it's more, to me, that opportunity to figure out how do we work together, right? Is it, for example, you know, when you're selecting some of these startups, right, somebody from an impact investing firm is on, like, I don't know, your IC or something like that, right, to bring a complementary perspective, not to displace any other perspective, right? I would see it more, I'd say, I don't think that the humanitarian sector or such organizations are a problem. I see them as an essential part of the ecosystem. I think, to me, a significant ability to de-risk in ways that complement the kind of de-risking that we as an early stage investor brings to the table. But I would say both, again, complementary in that we're both talking about very patient capital that is needed capital in this sort of hard but exciting climate space we invest in.
Thank you, Toucom. Marcus, you're on mute.
Yeah, sorry for that. I think that's kind of, I think that's fair, also kind of a very nice closing statement. We all need to work in the same direction, and we need to accept all participants and be very pragmatic and just kind of leveraging their capabilities and skill set. Maybe just before I hand over to you, Deborah, maybe kind of over to you, Jessica, and to come again for kind of final concluding note you want to share. And then I would like to thank from my side for all the participation, and handing over to you, Jessica.
Thanks, Marcus. Thanks, Deborah. And thanks for everybody who was able to join today. I think, you know, impact investing is, there's just a lot to unpick here. I think in the way that persistent venture builds, you know, we had an hour, there's there's so much more content and specific information about how we both source deals and structure our investments and structure the venture building part of our portfolio. And so I think, instead of trying to leave everybody with an optimistic bid, I would say, like, we're happy to continue the conversation offline. I'll put my email in the chat box, but I'm based just outside of Geneva, and if anyone's here, we'd love to pick up the conversation. As much as this was structured for us to sort of talk about what we're doing, we'd also always love to learn from other people in the space and how you're working. And so we hope to keep the conversation open with you all going forward. And we really appreciate, I know everyone's really busy, taking an hour to talk with us about impact investing and our venture building model.
Thank you, Jessica.
Yeah, no, I think just not much to add. Really, just I think thankful for Deborah, for Marcus, and I think all of you have joined. I think there's a lot of things I'm sure you could be doing, and so thank you for taking time to hear us. Thankful for the work I do, and I would say finally, as I think just adding to what Jessica has said, look, reach out, right? If you're ever in Nairobi, particularly, let me know. And as I say in Kenya, Asante sana. That means thank you. Thank you very much.
Thank you, Tukan. And Jessica and Marcus for leading through the conversation. I enjoyed it very much. It was very informative, and thank you for sharing your insights. For those that are here and you want to, and people in your network that need some hand-holding in doing the right investment in Africa, please connect them with Jessica and Tukan. I will do a follow-up note with the recording that you can share with your network and with the contact details of Jessica and Tukan, which you can share with your network. So please feel free to do it. We'll also post it on LinkedIn. The more sharing, the better. And I think this is what IFB is about: collaboration and bring the right people together. And that's what our intention is with these sessions. So please help us with that as well, and connect them with the right people. I want to thank you all participants for joining. I know before the holidays, it always gets super busy and you got a lot on your agenda. So thank you for joining. And this is our last session before the summer holidays. We'll pick it up again in September, end of August next year, which you're welcome to join our sessions locally and of course also online. So now with that, I wish you all a wonderful summer and thank you all for joining and a wonderful day ahead. Take care. Bye-bye.
Thank you.
Thanks, everyone. Bye.